We are back for the final day of Q2 2025. We'll be discussing everything that we've missed out in the last few weeks, the latest going on in the markets. We've had quite a bit between everything over in the Middle East, trade deals, and much more to discuss today on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, do us a favor, hit that like button, subscribe to the channel. Remember, nothing Kevin or I say is financial advice, so please do your own research. Kev, it's been a little bit. Things have been hectic for both of us as of late, but you know what? We're pushing forward. The markets are going to continue to do their thing. I think there's a lot for us to get caught up on. Like I mentioned at the top, things calming a little bit in the Middle East for the time being. Stuff with trade. Yeah, right. Listen, man, I think it was all a setup for them to get a better entry on Fartcoin is all I'm gonna say.
I was just gonna say the same thing.
We got our, I added to my Fart. We'll talk about that.
Yeah.
But we've had news with Canada and the trade deal there. We've had Trump's big, beautiful bill, the dumbest name for any bill that I've like. What are we doing? But that is going on. Meanwhile, we're in the heart of summer when things are supposed to be kind of boring, but that's not the case, man. How are you doing? How you feeling about the markets?
I'm doing great, dude. I'm wearing orange because we're going to talk about Microstrategy a little bit today too, and a lot of insider selling that's happening. We're also going to talk about some of the peculiarities around, some of the stuff that we saw in the Middle East. A lot of fun stuff in the markets. We say that summer volume is boring. It really is, but it's bringing a lot of things to light, which we'll talk about as well. I mean, this is just a perfect week for everything to be short. Nothing necessarily too crazy, I would anticipate, given that the holiday is on Friday. But there's
anything's possible.
There's a short window of volatility. We'll talk about that too. But yeah, anything is possible. But I think it's kind of painting a really, depending on which way you're positioned, a fun picture or a nasty picture for September, October. But where do you want to start today? I'm excited to jump into this.
Let's go with a quick recap of some of the data from last week. So there was some GDP data came in not too good. Q1 GDP revised down 0.5%. We had some home data that wasn't good either. New home sales came in at our expectation. We can talk about the housing market here in a second. We heard from Jerome Powell and other members of the Fed, some who are starting to push for a rate cut. We had PCE data on Friday. The headline number came in slightly below expectation by 1/10 of a point. Core came in 1/10 of a point above expectation. So it feels like that was a bit of a wash. And we saw that, spending and personal income are on the decline. Not too much of a surprise there. So that's one side of it. With that, we saw an increase in probability of a rate cut in July. It seems more and more likely that we are going to get I got to pull up the CME futures here real quick, but it seems more and more likely that, maybe we get something now up to the 21% chance of a rate cut. Just recently it was on about 18%. So a little bit of movement there. I think we're and you mentioned October, November, or September, that time frame. We had this meeting in July and then not another one again until middle of September. So about almost 2 months there. Do we see something where we've talked previously back when we thought we were going to get rate cuts sooner? A lot of times historically we've seen a rate cut and then the market begins to correct because everyone is priced in the rate cut. Now people are pricing in 3 rate cuts this year. I forget what bank it was. Was it Morgan Stanley who said next year they're pricing in like 6 or 7 rate cuts?
Well, they also said that September they moved up their probability from a rate cut from November to September. So that's also kind of telling that there is more of a feeling across some of these larger banks that September might be the time we get another rate cut.
Yeah, I'm seeing CME has it at 75% probability that we've
Yeah,
had at least one rate cut by that meeting. Yeah, we have 4 meetings left: July, September, October, and December. So, a lot to kind of parse through there.
that's
So that's kind
also
of go ahead.
It's also, without saying that Scott Bessent came out today and said that within the next few weeks they'll impose their shadow Fed member, right? That they're going to replace Jerome Powell. Again, his term
Yeah.
doesn't end until May 2026. Um, that will also be discussed heavily over the next year or so on this show because that's an important time as well in terms of how markets bottom and everything like that. We'll probably do a whole show on Ben Bernanke and Hank Paulson, and we'll compare it to Jerome Powell and Scott Bessent, Janet Yellen at some point. But it's really important too because the timing and the announcement of that, if it does come to fruition, that they announce, who Jerome Powell's, replacement will be, that could absolutely just unleash havoc on the markets.
It could also be the kind of thing where, I mean, we know that Trump is going to install someone who is favorable to what he wants to do,
Absolutely.
right? Like he is not going to take someone who isn't on the same page. And so
Yes, man.
maybe it's a really crypto, with how deep into crypto Trump has gotten because of his own personal interests. Wouldn't shock me if it was a very crypto friendly person who is the next head of the Fed.
Most likely it will be. Also, we'll talk about Michael Saylor and some Bitcoin stuff too. That's concerning. So again, it really depends on when they announce this too. They announced it in August. Could get a little bit of a rally here. They announced it in September. Very different circumstance. It's just funny how that 1 month makes a huge difference. And again, a lot of that comes back to debt. So should we jump into debt? I think that's probably a
Yeah.
really important thing to do.
Yeah, I think we touched on the data points from last week. This week, real quick, just quick preview. A lot of jobs information coming out this week. Markets are closed on Friday for 4th of July, but tomorrow we have the job openings number. Jerome Powell is also speaking tomorrow. We have private sector employment on Thursday or on Wednesday. And then Thursday is going to be the employment report with jobs added, unemployment rate, hourly wages, all of those things. So we're going to have a really condensed week here, just a few days where we get a lot more data that is going to inform the decision that the Fed is going to make in July. So go ahead. We can move into the debt part of it now.
Absolutely. And the way I'm just going to explain the debt, we're just going to look at the S&P 500 because this is extremely telling of what we can anticipate moving forward. I was talking about a theory a while back, maybe February, March, where a lot of the loans from COVID, which would have been the 5-year loans, were starting to come due, right? 0% interest rates, near zero for most of them. And, that's free money that they took through into the equity markets. We got the all-time highs back in 2021, pull back in 2022, kept on climbing. Again, it's a 5-year loan. So that's where most of the majority of them were taken out because, again, who knows how the future is going to look. That was a smart move on a lot of them. A lot of their on behalf of a lot of banks, but it's also an extremely dumb move because we're going to see why this is catastrophic for markets in general. The pandemic the crash began happening in February of 2020, I believe. And we got the flash crash right around OPEX of that year. And so by the time we got a lot of the loans, being taken out, it would have been in March. When do we see the bottom of the market this time around? Well, it was in April. So that would have been right around the time that the 5 years from March were coming due into April, being paid off. How are they paying it off? Well, they sold a shit ton of fucking equities. We went from 6140 all the way down to just above 4,800 in the S&P in a matter of, shit, how long was this? 34 trading days. Pretty quick time period to drop. How much did it drop to, right? Dropped roughly 21%. Now that's an absolute bear market. That's a bear market, but we got a massive recovery rally, right? And I think a lot of people obviously bought the dip, but we're also into this point in the summer where a lot of this, I would say right here in May, right after the May OPEX, we got this gap up. We went into the summer trading months where volatility is being compressed, right? And how are they doing that? Well, the algorithms, for the most part, on a lot of stocks and a lot of indexes are trading within similar patterns. That being said, that tells me that the computers are doing extra hard work to keep price within a certain range. And as they do that, a lot of insiders are selling. We'll talk about that too. From Microstrategy to Amazon to NVIDIA, the CEOs, the people at the top of some of those companies offloading tons of shares. Amazon, just so everyone knows, 5.4 billion on the day of the wedding. That's a no biggie. But looking at where we're heading with volatility being compressed because we're trading, these algorithms are trading these indexes, these stocks pushing higher. But again, they're not breaking when we're seeing overbought levels, or the MACD is extremely, in the overbought territory. It should be curling down. What that tells me is that we're looking at another mass sell-off similar to what we saw in March or April. I'm not saying it's right now. Obviously, the last time it happened was a quarterly OPEX. We do have a 3 or so day window just because of the holiday and the weekend. I think July 7th would be the date where we'd have to see a massive vol spike for us to see a big pullback in the market. Don't necessarily think that's going to happen. I do think, however, given where we're heading into September, where the majority of the market started to rally in 2020, right? Let's see. We had a really good move up, from like September 20th, 2020. So September 20th, 2020, which would have been right around that OPEX. You can see that the entire S&P moved up until we got to that height of the market in 2021, 50%, right? So obviously a lot of the money that they borrowed in September, they threw into the equity market. So by the time we hit September the following year, we're up 50%. Now we have to look 5 years out from September of 2020. Well, it's going to be really interesting around that quarterly OPEX from September into October. And it's going to be very important because if the last quarterly OPEX was any indication of what's to come, and we know that the first and the third, Q1 and Q3 are the most important quarters when it comes to a rebalancing of portfolios. Obviously, a lot of people like to point that it's Q4 going into the new year. Rarely is that the one that has the massive moves to the upside or the downside. You might get a Santa rally, but you rarely get a massive push to the downside, except for very unique situations. We'll talk about that, maybe not today, but in the future. We're getting to a point where it's very possible we start to tail off into September. We start seeing the market pull back. Again, the market is very overstretched. I don't care what anyone says. You broke your all-time highs off summer trading volume, meaning that there's not that many people actually trading out there. The price continues to push up. Insiders are selling. You got massive gaps, and gap up each and every morning in the S&P. Same with the other ones too. The thing is, you're probably going to start to see that volume continue to stay fairly flat. The algorithms are probably going to switch off at some point, and you're going to start to see the market slowly roll over. That being said, it's very possible before we get to that Q3 into Q4 OPEX, volatility stays flat. And that would absolutely suck because it's like, okay, how do we make money on either of these directions, right? It's very possible that there's a lot of products out there that dampen volatility for a period of time. Doesn't mean that it can't go up. It just means that it's not going to be the spike that we were anticipating that we saw maybe in August of last year when the yen carry trade unwound. That being said, we might see some currency problems, even if we're not seeing a lot of things happen in the U.S. equity markets. So I'm going to jump over to Asia, if you don't mind now. Let's see.
Go for it.
Pull up the Nikkei. All right, this is a really interesting spot because every time the Nikkei gets around this 40,000 level, it's at 40,500 right now, you do have a bit of a pullback, right? You saw this back in March of 2024, pulled back from 40,000 all the way down to 36. Okay, pushed up higher. And the next time it pushed up that high would have been July of 2024. We know what happened right after that. We got the crash all the way to 31,000. And that would have been the yen carry trade unwind. Every time you can just see that this 40,500 level, for the most part, is extreme resistance. The other thing is when we're looking at this could be Wyckoff distribution, right? We have our up thrust after distribution. We're looking at where the markets have pulled back as well. I didn't even know this, but the Nikkei pulled back pretty hard in April 2025 as well. What? I'm stupid. We just talked about that. For some reason, I forgot that we had the quarterly OPEX sell-off and the tariff fears. So that's why that pulled it back. You had a double bottom here, a little bit of a rally up here. But again, you're nearing that level of resistance. If you look at the stochastic RSI on the daily, I mean, it's just holding on to this level of resistance right here. At some point, this is going to not hold, and we're going to probably be moving to the downside. The MACD is extremely overbought. If we look at this also on, let's see, the weekly, extremely overbought, right? And we're at a level of key resistance. It's funny that you were talking about some of the Fed meetings that are coming up and how we have nothing necessarily in August. Well, we got some big dates coming up in Japan as well. I think July 30th is one that's really interesting, which is equivalent to the July 24th meeting that they had last year. And right after that, and when I think the reports came out, there was talk of raising rates in Japan. They talk about doing that now, given where the yen is also going and where the dollar is going. I mean, I don't know if people have been keeping an eye on the yen, but it's been getting stronger and stronger against the dollar the past few trading sessions. And, it's at a key level of support. If it doesn't hold this, you're going a lot lower, which means it's getting stronger. And if we look at the dollar here, the dollar's at 96.845. This little line
The
that I drew down.
dollar is at over 3-year low.
Yep. And that's important.
Last time the dollar was this low was March 1st of 22.
Yep. And that would have been right around the time that they're raising rates. Very fun times that was. But the thing that's really important is this level of support. I think it's going to hold and I think it's going to hold long term. And what I mean long term is you might crash below it for a period of time. And if that's the case, that means the yen's going to get stronger, and that might cause the unwind to happen. And if that's the case, the dollar will get stronger over the following months, because I do think that that's going to spark some type of kick in the system where, okay, equities, we're going to be risk off with equities. We're going to sell everything, go into cash. You might see some of the yields react positively to that, because people are just trying to be like, okay, how can I make money in some direction? I don't want to lose everything in the market. Just kind of something to keep an eye on. I know it's a long-winded explanation, but what I'm essentially saying is that summer volatility might be dampened for the U.S. markets. There is a possibility that we do see some of the contagion from last year kind of bleed out again into August, September for Asia. I don't think that party is over with, and I think that this one's going to be the nail in the coffin for Japan for, maybe a lost decade, maybe 15 years, similar to 1990 to 2008. So that's something we have to look forward to. We'll continue to keep an eye on it. But again, the dollar being this weak and the yen getting stronger and stronger by the day, they're either going to have to print themselves out of inflation, which is also inflationary. Makes no sense to do that. And we also have the BOJ meetings coming up. Just problematic turbulence that's coming all around. And again, tariffs still apparently coming back in a few days. I think those will be held off for September, but those are supposed to be the 90 days is supposed to pass, I think, July 8th or something like that too.
It's July 9th.
9th, yeah. Yep. So a lot of stuff just floating out there that's very problematic.
All right. Do you want to go into MicroStrategy?
Yeah, let's do that. Again, MicroStrategy is one that's very fun because a lot of insiders are selling it. And why are they selling it here, right? Well, let's take a look at what the charts are saying. You had this really good bounce from the lows in February, March. Yeah, I guess you had a bounce. I'm not going to say it's a great bounce. It's up 84%. Granted,
pretty good bounce.
Yeah, and I think that's why a lot of insiders are also, selling, right? They were selling prior to this, but they're also selling here. There is a theory out there that Bitcoin is about to roll over and it's going to eat shit. And, we're talking about sub 30K BTC, sub 20K BTC. I have one guy that's saying $4,000 Bitcoin.
I don't believe. Oh, no, I don't believe a word of that.
I believe it only if two things happen. MicroStrategy fucks up the trade and they have to sell a shit ton of Bitcoin and they lose and they pull a March of 2000 all over again. And Michael Saylor is the most hated man on earth. And the other thing would have to be stablecoin regulation that pretty much outlaws Tether. Are there hints of that? Vaguely. Is it more likely that MicroStrategy fails and screws something up horribly? Yeah, they've done it before. They can do it again. I also think that Michael Saylor is not someone I want to be trusting my money with. That's just me personally. I think you're also seeing a lot of people taking profit within the company. It's not necessarily a good sign, especially when you've had this really good bounce here. I think they're getting out. They're trying to jump to the lifeboats and see if they could survive this. Because if we're looking at this here, where the next level of major support is, it's somewhere down around 233. Granted, that's, a 42% drop in the market. And again, if MicroStrategy drops that much, we can only imagine what's going to happen to Bitcoin, right? Because then they're going to probably have to sell off some of their BTC holdings. And where there's really, really good support is down here at about $100 a share. Again, this sounds crazy to be talking about it right now. I think that by the time Powell is heading out the door in May of 2026, it could be a laughable moment. We look back on this episode and be like, oh yeah, it was actually that obvious that MicroStrategy was just going to eat shit. Technicals are just not necessarily super strong here. I think we're in a corrective move to the downside, and this could be just an ABC. Let's pull this up. A, B, C. Where this bottoms out is anyone's guess. I mean, if it's March 2000, you're going sub 100. You're looking at anywhere between $71 and $40 a share. If they don't fuck up the trade and it's just, a really big market correction like we expect, just given the cycle, everything that's happened since the pandemic, prior to the pandemic, since 2008, we've been waiting for some major pullback in the markets of catastrophic levels, probably looking at 100 or so. But this is an ABC corrective pattern, in my opinion. I think we're getting very close. If not, we're done with this B wave and we're in the C wave. So what we could be looking at right now is our wave 1, wave 2. Let me just get the 5 wave here. And again, technical analysis only works until it doesn't. We could be looking for wave 3, wave 4, maybe something. The capitulation really comes in, then brings us to wave 5. And that would complete 5 waves down, 3 waves up, 5 waves down, ABC pattern. It'd be a perfect scenario on that. Now let's look at Bitcoin and compare what could potentially be coming its way. Let's see, I think it's this chart, right? Yeah, it's this chart. This is the one that we didn't want to look at. It's the parabolic resistance. I said that we weren't going higher than 110, I believe. Or 110 has usually been a pretty good level of resistance. At least it has been, throughout this, December to where we are now. So 6-7 months or so, just holding, flat around these levels. You're just in this wedge and you keep hitting your head on this and you're really hoping that this is going to break out, right? Would like to say, though, that this could be seen as this, and I will say that could be bullish. Might get one real big spike, and that's just it's a bear trap, and it's a bull flag, and it pushes up higher. That's a possibility, I will admit. But I think that the parabolic resistance has been a little bit more accurate, and we're just going to have to wait and see, to be honest. Not a fun thing to say, but what happens over the summer? Obviously, Bitcoin dominance is still extremely high. I think that if we do see Bitcoin pull back, there could still be enough momentum and people believing in one last little run up for maybe not Bitcoin, but for alts, that we're seeing some of this flow into other sectors. You guys know that I'm very bullish on short squeezes in the next month or two. Very possible that people believe that we still see some type of squeeze in some markets. We'll talk about Fartcoin in a second. But Bitcoin could absolutely just drop, and we could see some of that money flow into their alts as a last minute resort, and Bitcoin dominance could come down. Bitcoin dominance, I do expect at some point to come down. It's very scary if it doesn't, because that means that when Bitcoin does go, you're probably going to see it drag down a lot of things. So if it naturally came down as alts were staying somewhat stable, it's a good sign for an alt season. What I think is probably happening, let's see on the weekly, the weekly still has some indication that Bitcoin dominance could push up a little bit more, but I will say that the MACD is starting to roll over here. So we could see Bitcoin dominance in the weeks leading into, Q3, Q4, that interchange the two, that we could see this come down. That could allow some of these alts to rip, right? I look at some of the alts, not necessarily anything I'm really interested in, except this guy right here.
Well, real quick, I want to talk, we got to mention Solana and the fact that we have what appears to be the Solana ETF approval any day now. It looks like XRP is having a nice little run up. I believe the speculation there is an XRP ETF eventually. And I think, maybe that is the local top for Solana when we finally get the news of this, being approved. I think that's going to come sooner rather than later. I don't know if I really buy Solana hitting a new all-time high anytime soon. That would have to be a monster move, and it's possible. But that's some of the excitement there. And then I also think we need to mention Robinhood as well, and the news that they put out today of they're offering crypto perpetual futures now in app. So that's going to get more people. I mean, I don't know how good that is for most people. Most people don't think of much of a business trading perps, but there's that. They're building their own L2 on Ethereum. I believe they're tokenizing stocks using Arbitrum. So a lot of crypto announcements today from Robinhood, and the stock has responded very favorably.
Yeah, I mean that's very bullish for the time being, right? It's also could be seen as trying to get liquidity, another way to get retail in. Um, we'll find out. I think that's literally the kind of where we have to be right now in the summer months until we get a move in either direction. Um, it's also possible that Solana and XRP, if any of those ETFs do come to fruition, we're looking at maybe some people speculating on some of the other alts. Uh, I think that's very possible. I remember when the XRP back in 2023, what was it, July of 2023, XRP beat the SEC, or it was saw that they beat the SEC. You saw alts just absolutely rip. It was like a face melting rip. Things just jumped up by like 20% in a matter of 5 minutes. You could get something like that too. And we're heading into July. If we're looking at repeated things that we've seen over the past 5 years, it wouldn't surprise me if we do see a little bit of an alt rip in July. Bitcoin dominance obviously is the one key factor, along with liquidity, that causes problems. But again, if we are seeing Robinhood do something like this, maybe it does bring in a little bit more liquidity. I don't know how much retail really has left, but it could be enough to kind of jumpstart some things in that direction. Solana, I agree, not going to all-time highs. Maybe it pushes up a little bit here. We have an A, B, maybe we have our C wave, and it comes to maybe 222, maybe 240 if we're really pushing it, guys. You'd have to print a lot of USDT, I think, to go along with it. But I think it's possible that we are looking at, something along those lines for Solana. If we look at XRP real quick, XRP just looks like shit, guys. I'm sorry, just sideways trading. I don't like it. Got a little bit of a pump today, but this thing probably should have been a lot higher. Shoulda, coulda, woulda, isn't, and that's going to be kind of telling what happens here. Doesn't mean that it can't go up higher. I just think that maybe this cycle isn't the cycle for XRP. Maybe things need to wash out, and then you might see this thing kind of take off. I don't know. I'm not going to say anything, about XRP in general. Let's take a look at the total market cap. Let's, total two. This looks bullish right here. You're trading in what looks like a bull flag, lower lows and lower highs. Usually this does break out. Look at the total three, very similar. So you have hints, whispers of something that could be an alt season. I think it's going to come very close to the end, if you guys know what I'm saying. Very similar to how, 2021 was, right? We got all the euphoria in October of 2021, November, cool. December, January, just shit, just absolute shit. Everyone was sad. So it's very possible that you could see something like that push into, July, August, September. But profit taking is going to be something that I will be definitely doing if I am going to play that game, along with some of these alts. Now, let's look at one last thing before getting to Fartcoin, then we can just kind of wrap it up. Yeah, this is, I think, very similar to what we're seeing across the board. Again, a lot of trading, a lot of similar patterns. Speaking of patterns that I think still look beautiful to this day, it's Fartcoin. I mean, that's still a cup and handle. We're just waiting to finish that handle. And that comes around July 24th, which is also very interesting because that's when GameStop also looks like it's going to be breaking out of its triangle. And it's also, 7 days before the BOJ meeting. So, who knows? Maybe if there's a lot of shorts out there, they're going to get squeezed. And if GME is ripping, I wouldn't be surprised if something named Fartcoin wouldn't rip with it too, right? I mean,
the final piece in the puzzle is Robinhood. Like, Robinhood not listing Fartcoin is pissing me off. Like, what, Vlad, what are we doing? Like, and I mean, if you look at the volume of Fartcoin, like on Coinbase, the amount of fees that Robinhood is missing out on by not listing Fartcoin is crazy. Like, Coinbase is cleaning up right now by being, the main centralized exchange with Fartcoin on it.
Those fees are so expensive.
They're crushing it. Like, Coinbase is doing so well. And I added to my Fartcoin position a couple weeks ago, back when it went under $1, like 95 cents, as kind of a shorter term play. I still have my larger bag, but yeah, I just think that, the mind share is there, man. Like the fart, like whenever, like, I don't care if people want to use Fartcoin to make fun of crypto. That's fine. Like the attention is good in my book, and that's the go-to for everyone in TradFi to make fun of crypto, is to mention Fartcoin. Stephen Colbert mentioned Fartcoin in his opening monologue on his show last week, like one of his episodes. Like Fartcoin is in the mainstream lexicon. It is in people. It has the mind. It lives rent free in so many people's brains, and I fucking love it. And I'm just gonna keep bull posting Fartcoin until that shit hits $5, baby, because it's happening.
You know, everything you said just makes sense to me, and it made me realize that I'm the expert of madness and not reason, because my portfolio right now consists of GameStop, FFAI, Fartcoin, and volatility. That's all I have right now. But I think that having an approach like that, and I think there's some reason behind a lot of the positions that we talk about on the show. Obviously, the Fartcoin position. I said that if it got down to 91 cents, if it got to this trend line, I'd buy. I did. I bought 1,000 coins, right? Nothing crazy. It's just like I had some money in my Coinbase left over. I'm like, yeah, let me just buy some down here. I still think that it's very possible this is, like we talked before, Shiba Inu, and it's only $1 billion market cap, or probably a little bit over that now.
Yeah.
For looking at what Shiba went in October of 2021, 30 billion, right? A squeeze like that, a listing, and you just get enough retail behind it, and people think that, and again, you get one or two bullish fucking headlines, and Trump says something like Fartcoin, this thing's going, parabolic. But the technical structures right now continue to be bullish, in my opinion, unless until we get, a break of this trend line, this white trend line. If we continue to hold it, I mean, if it goes down to 98 cents, it's possible it goes down to 98 cents if we get a little bit of a pullback in the next few days when that volatility window is kind of open. I'll probably buy a little bit more, as long as it doesn't lose that. And if it does lose it and it gets right back above it, what are we looking at here? I do want to point this out too. This is another thing that we kind of have to keep an eye on. We're looking at a cup and handle. We're also not noticing that this could be an inverse head and shoulders, right? Here's the left shoulder, here's the head. We're waiting for the right shoulder. And if that's a cup and handle and an inverted head and shoulders, that's fucking double bullish. It's double bullish, guys. I wish I had a graphic that said that, but that's what I think looking at this, and we're probably going to see it kind of rip. But again, where would a $30 billion market cap take us to? What is that, like $30 a coin? I'm not saying that it's going to go there, but I'd be if it's $10 a coin, I'm very happy.
I'd be ecstatic. I'd be so happy.
Me too.
And I mean, listen, I think that there's, if we're playing into that 4-year cycle, that 2021 cycle, and we're trying to look at everything in totality. Like, I'm looking at the calendar now, and we have, 3 more Fed meetings between now and November. Like October 29th is going to be that third Fed meeting. And there's a very good chance that, like, the probabilities are lining up that is when the second rate cut is. Maybe shortly thereafter is when the drop comes. So, like, I'm not saying that you should be holding Fartcoin forever. I'm certainly not going to be. But I do think that we're going to see over the next few months the potential for a really big parabolic move here. And I don't think there's anything wrong in taking profit along the way. Like, I'm certainly going to be doing that. And, I'm not going to say I don't plan on selling all of it by November, but I'll probably have had, a good chunk offloaded by the time November gets here, because I do think if we're going to see any sort of correction, it's probably going to be after that second rate cut. When we start to see, that sell the news. Because, like, we saw, it's interesting because we already saw one rate cut. It feels like in my head, the market's going to be like, okay, here's the second rate cut, but it was so long ago from the previous one. We need to see follow through of a second one after that to really believe that the Fed is in this trajectory of cutting rates seriously. So it wouldn't surprise me if the big move happens after the second, once the Fed cuts that rate down to 3.75 to 4% range.
Yeah. I mean, just to finish out with Fartcoin, I expect that last shoulder to drop. And when it does, as long as it's around $1, I will add to my position. Hopefully Robinhood, lists it by that point, because I think that'd be offer the best entry. I'm not saying not financial advice, but the best entry for people who are probably looking to get into Fartcoin. I do think that's going to probably take off. And again, I think you said a really interesting date with that one meeting being the 29th. You said 29th of October.
Yeah.
Something happened like 96 years prior to that. That was fucking terrible for most of the world. But again, symbolic dates, symbolic things that are out there in the markets, these cycles, these numbers that continue to repeat. I think there's a lot of stuff that we're going to continue to look at and see that this is just kind of the way that finance and economics kind of works in these cycles, and it's going to be. Like I said, taking profit is going to be a skill that I really utilize going into the end of this year. But I got nothing else than that. Obviously, still bullish on GameStop. We'll talk about that maybe Wednesday. Just Fartcoin is definitely top of mind right now.
All right. That is going to wrap it for today. We'll be back on Wednesday. No show Friday, 4th of July here in the States. So we'll be back on Wednesday, though. Talk about the latest jobs data, how we're handling the markets for the second half of the year a little bit further. Last day of the quarter should be an interesting one, watching those monthly closes. But appreciate everyone who joined us today. If you haven't yet, like, subscribe, drop a comment, share it out on social. It's been a weird last month and a half, me bringing the second kiddo home, but trying to get back into a regular routine of 1 to 2 shows a week. So appreciate those of you who continue to support us. We'll be back more frequently. Have an awesome rest of your day, everybody. Stay safe out there, and we'll see you next time.
Take care, everyone.